Most drivers over 50 never realize this. But your car insurance follows a pattern. In your 50s and 60s, your rates often go down. You're seen as experienced, lower risk, more predictable behind the wheel. But then, something changes. Right around your late 70s, into your 80s, those same rates can start creeping back up. No warning, no explanation, just a higher bill. And that's where it gets confusing, because at this stage, you're probably driving less than ever, avoiding busy roads, taking fewer risks. So why would the price go up? It comes down to how insurance companies actually work. They don't price based on you personally. They price based on patterns, large groups, statistics, things like reaction time, vision changes, and accident trends across age ranges. So even if nothing about your driving has changed, your rate still might. But here's what most people don't realize. That number isn't fixed, because every insurance company calculates risk differently, which means two companies can look at the exact same driver, same car, same history, and give completely different prices. And this happens every day. Now, naturally, people try to compare rates online and run into the same problem. Forms, long forms, repeating the same information over and over again, different websites, same questions. And after a few attempts, most people give up. They stick with what they have and assume it's normal. But it might not be, especially if you've made one of these common mistakes. Letting your policy auto-renew without reviewing it, keeping coverage that no longer fits your vehicle, not updating your mileage after retiring, or never asking about discounts that may apply to you. Because there are actually quite a few that many drivers miss. Things like defensive driving discounts, low mileage discounts, bundling home and auto, even discounts tied to safety features or memberships. And here's the part most people overlook. Insurance companies don't always apply these automatically. You have to ask. If you don't, you could be paying more than necessary without realizing it. Now here's where things really open up. Different companies are better for different types of drivers. Some are more competitive for seniors, some for retirees, some for low mileage drivers, some focus on pricing, others on coverage flexibility or service. That's why you'll hear names like Geico, State Farm, Allstate, Travelers, or USAA. But none of them are the best for everyone. The best one depends on you, your driving habits, your location, your situation. And that's why guessing doesn't work. You have to compare. But here's the real problem. Shopping around manually takes time, and most people don't want to fill out 5 different forms just to get answers. So instead, a lot of drivers are now doing something much simpler. They make one quick call and have someone check multiple options for them. Based on their situation, it saves time, it removes the guesswork, and it gives you a clearer picture of what's actually available. No pressure, no obligation, you're just checking. Because at the end of the day, you won't know if your current rate still makes sense unless you actually look, especially if it's been a while or your driving habits have changed. So before your next renewal shows up, take a minute and see where you stand. Go to getrightinsure.com/GK and check your options now. Or call 1-888-2402-921 to get a quote.